Let's talk about who should pay more tax. The spending watchdog has warned Rachel Reeves that she's going to have to probably raise taxes in her next budget. Experts at the Institute for Fiscal Studies say her spring statement did not provide the stability she'd hoped for, and there will be months of speculation, therefore, about tax rises. And that's going to be pretty horrible because they had got elected on a promise not to raise them. So there she is delivering the spring statement. And we're left with this very tight amount of so-called headroom, which basically means she'll probably have to raise more money. Have a look at these two people here on the bench. So you've got here a guy who's earning 100 grand a year, and you've got somebody who's on hard times, actually, it looks like, on welfare. And then you've got another person here. We're just giving you examples of her possible targets for tax rises. This guy's earned a lot of money. He's on a barge. And then we've got Tech Bro over here. International guy, runs a big company, let's say Meta, Amazon, Starbucks, Google, whatever. So, big Tech Bro, 100K a year guy, well off but still working, someone on welfare, and this guy has put away 25 million. He's bought a canal boat, he's just going around Britain in it, so he's not officially got a job, so you can't use income tax with him. Now think about these four. Who do you hit? And I'll just tell you some of the problems. Okay, big Tech Bro, if he's based in Britain, hit him. But he can move, can't he? 100K guy already thinks he's overtaxed. The welfare person, which incidentally involves pensioners as well, think the winter fuel allowance, well, they've been hit sideways already, and you can see the political problem there. This person, yeah, maybe he's sitting on wealth. He says he's already paid tax on it. Maybe you hit the guy on the barge. He could leave the country, though, if he's got 25 million. Who do you hit, Ayo?
It's a tough one. Honestly, I think this budget's been tough. And there's no easy one because you can't keep taxing the average worker, PAYE worker.
Well, what about 100K guy is not the average worker. He's on a relatively big income. He would be described as rich by a lot of people. Can you hit him?
But I did the numbers on that, so looked at it. Basically, they won't have any of their personal allowance. They potentially work for the big city firms, so they have to be in London. The cost of living there is higher, expenditure, travel, rent/mortgages. There's actually people already feel quite squeezed, even though it sounds, for most people watching this across the country, especially not in London, it seems like, oh no, they're abundant. It feels like we'll almost be punishing people who are striving and maybe made some specific decisions to do specific jobs.
So if you don't get a 100K guy with the umbrella, where do you go?
I think it's got to be the Tech Bro. We've got to start taxing these corporations. They found ways to not be taxed in the past, offshore, moving. We need to literally look at how we tighten these loopholes because they're not being taxed and they're creating so many cultural issues as well.
You raise a very interesting issue because they have got something called a digital services tax, which is aimed at hitting the big tech bros, James. But the problem is that America's got cross about it.
They have got cross about it, and I think we're almost asking the wrong question. Because if you start to say who should pay more tax, look what happened when the budget event took place in October. So the budget event that took place, the markets took fright, they increased our rates of interest. So pretty much every single tax rise will go in paying more interest on the debt we already have.
Yeah.
So what does that mean? What that means is that our rules, in my view, are too complicated. We are salami slicing so that people don't quite know how much tax they are paying, which means that we're having infighting, which means that we don't target those who genuinely should be paying more. And we have rules which have encouraged investment, but almost punished those in this country who are entrepreneurs and risk takers. So until or unless we address all of those things, you're not going to have a successful go at the tech bros. And I would agree, they're probably where I start. But any international company, because we don't have a global taxation regime, you know, money and tax sort of flows like water. It'll go to its lowest level.
Well, I'm listening to everything you've said, and you could have said it in one word, welfare. That's where you want to go, isn't it? You want to take money off the person who's claiming.
Do you know,
well, that's the only choice you've got.
No, that's not. Because
so you're happy with us paying out the amount we're paying in welfare?
First of all,
350 billion.
We do waste a lot of money in this country. We have this view, oh, we need more money for this and more money for that. If you have a problem with your household budget, what do? The first thing you do is you look at what you're doing and you try and cut stuff out that's not needed. Are we cutting the right stuff out? I don't think we are. I think we're unfairly targeting some people who desperately need our help, and we're still giving money where we don't need to. So that's one set of things. The second thing is that if you want to take from people who are wealthy, you can kind of do it once, you can kind of do it twice, until or unless you recognise growing the economy is the answer, which means for a few years you might have to dip into your reserves. You've got to allow. We're already being taxed more. Tax thresholds have not moved.
Okay.
Inflation has.
Well,
We're being
the
stuffed.
Conservatives were in with all of those ideas, and they ended up with the highest tax
Because
rates
they were
we've had
idiots and
since
they made
war.
the wrong choices. I'm not here to support
But in the
them.
end, you want to do what Liz Truss does. Let's see how that
No,
goes.
because she didn't understand how to manage markets, as Rachel Reeves hasn't done. They're all as
I don't know. We're running out of options here, aren't we?
I know we're running out of options, but I do agree we can't tax people on welfare anymore. The stats show that 2029 we're going to have 250,000 people in the UK in absolute poverty or close to it,
So
and
you're
that'll be
obviously not
50,000
taxing them.
children.
What you're doing is simply cutting the welfare.
Cutting enough
you wouldn't
to
do that.
cause them harm. I wouldn't do
Okay,
that.
okay.
And I don't think you can keep taxing the PAYE worker when every April all bills increase, inflation's
Well, what about the guy on
increasing.
the barge? Look at this guy
But
here.
here's-
Right?
here's-
So
I do
hang on,
think-
James.
I do
Sorry.
agree that we do
the
need
guy
to
on the
grow.
barge is sitting on wealth, and there you get to a wealth tax.
We need to find a way of taxing those with assets, because that's what basically is happening. We have the asset class and the PAYE worker. They can't do anymore.
Right.
They're
But
being
if
exploited.
the
They're
guy-
transacting time for money. They can't grow
Understood.
that
But
anymore.
you've got to avoid the double taxation disaster. So if somebody
But
is
we already
asset,
have that.
yeah. Well, we do have a double taxation disaster. So if somebody is asset rich and cash poor, then you need to avoid taking another slice of something that is going to put more people into difficulty. But if somebody is sitting on assets and not either using them or something else, you have to find a way. But then you have to be prepared to take away some taxes in order to go after that different style of money. But what I would say,
I mean, how do you get the money off the guy on the barge when he can just sail away?
Well,
and we've lost about. I think we've gone from 177 billionaires to 165.
but you're not asking the question, which is, well, where did they get that money? Because if they got that money and they paid tax along the way, then
that's
stop
right.
being so envious. Go after.
Oh, okay, so you can't, right?
So you've got to stop the politics of envy, saying they've got it, we need it, we'll have it.
Okay,
Stop
let's get
all
a call.
that.
Let's get a call.
I've got
Thank
one
you.
more
I'll
comment.
come back to you. Go on quickly, yeah.
One more comment, which is the government needs to use its assets more effectively. There are properties up and down this land that they could use effectively, but they're not business-minded.
Okay,
in
but
that.
Veronica on the Isle of Wight. Hi.
Hi.
Hey, how are you doing? Sorry we kept you waiting there.
Fine, that's all right, thanks. Yeah, I've got a solution.
Right.
And instead of taxing businesses on net profit,
Yeah.
charge them on gross profit.
Okay, so they can't invest in plant and they can't buy machinery and stuff.
Yeah, but what you do is alter the rate of tax that they pay, so they pay less tax on per pound, whatever. But you would alter it so that small businesses don't pay any more tax than what they pay now. But bigger businesses, where they ship their money abroad before they declare anything for tax, they will get hit before they shift their money abroad.
I see the point
So
of that.
you
Got it.
lower the rate of tax for all businesses, but you make it fairer.
Got it. Well,
Veronica,
we
there is already a tax of that nature, which of course is VAT. So
No,
do you want to?
we all pay VAT,
Yes, of course.
whether you're big or small. We all pay VAT, but a lot of it can be claimed back anyway for investing in new businesses.
Got it. Okay, but
things
it would
that.
stop a situation we had with Starbucks a few years back where they were renting their logo from a separate company in Amsterdam, which was a way of putting millions
But there are companies
into a different jurisdiction.
It was a Luxembourg SARL, and they are used a lot. And this is the point which I think you made, Aya, which is we've got to untangle the tax system. Instead of pointing the finger and saying, we must have this, we've got to take that, they've got to... If somebody isn't paying taxes, if a company isn't paying taxes because the rules say they can't, of course there's some people with fraud. But if people are reducing their tax bill, and people say, oh, it's terrible that they do, but I would say that every single individual in this country does it.
Okay.
You have an
Thanks,
ISA, you have a
Veronica.
pension, you're reducing your tax bill.
Derek in Northamptonshire, hi.
Oh, good morning, Jeremy and panel.
Can I ask you, Derek, to look at the screen again and choose between the four people? Don't range beyond these four, please. You've got a guy on 100,000. You've got a person on welfare. You've got someone who's sitting on 25 million and not working. And you've got what I've called a big tech bro who, got to assume, is not a British national. Where would you go?
Well, I think the situation is that the more money you earn, the more tax you pay. We've got a sliding scale of taxation. So when you get to £100,000, you're paying about 45% tax, and you don't get any tax allowances.
Yeah.
So I think we have a system already in place that automatically controls the amount of tax you pay according to what you earn.
Yeah, but the trouble is that Rachel Reeves needs to apparently bring in some more because
the way
world
of doing
changed.
that, I think, the first thought, I must admit, it's not my area of expertise. I only phoned in on impulse, to be honest. But the first thought that came to my mind was that there are a number of multinational corporations that make a lot of money in this country, billions, but don't pay the right amount of tax. But I also understand that organisations don't pay any tax at all.
Yeah, well, OK, Derek, thank you. Well, I think we're on the guy with the yellow baseball cap there, aren't we? We're on Big Tech Bro. And, of course, what Trump has done is he said to them, I know you've been outside the States earning money. I know you've got massive cash reserves. He said this to Apple. Bring it back. We'll give you a sweetheart deal. We just want you back in this country. And that's, you don't like that?
I think, honestly, it's going to disincentivise people from being in the UK. And people are employed in these industries. So I think it's a fine line of taxing them and not allowing them to just
Well,
leave our
exactly. Well, why don't
country.
we say to Starbucks, look, come and do all your tax fraud here? Because at least you can
that's-
employ people.
That's what Ireland did.
Yes, it is what Ireland did.
I do think we need a new way of looking at this because the system doesn't work. And you're right, James.
Well,
it does need to be
we are in
redesigned.
so much trouble.
But there is an option that for companies that use our assets, for example, when you get your council tax bill, it tells you what you're paying for, right? But there are companies that use assets that we own, like our roads, our rail, and we can find a way of costing that to them and charging that. So that they're not just, our services. It's another government service, and we can make money back as a government.
Let me just take one more call from Richard in Yorkshire. Hi, Richard. Sorry, guys. Richard, hi.
Hello.
Well,
Hello.
where do we go?
Hello?
Hello, Richard.
Yeah, hello. Right.
How are you?
Hello, are you there? I'm very well.
Great. Where do we go to raise the extra money if it's taxation?
Okay, well, one tax that they have not considered is capital gains tax on homes. You pay capital gains tax on second homes, but not on your first home.
Yeah, well, look, this is James is sighing because he does a lot of property. You're right. The last tax loophole in this country is the profit you make when you sell your house.
It's not a loophole.
Well, but I tell you, in support of James, Richard, any government that taxes that will lose the next election by about 1 million squillion votes.
But let James just hear me through, though.
All right.
If you did that, what you're effectively going to do is reduce the amount of money people have to put into their next home when they're moving up the ladder. Okay.
Brilliant.
The result of that will actually just be reduced house prices.
What about that,
And
James?
that will
Tax people when they sell a house.
The thing is that if you attack capital and you attack somebody's primary residence, then you're going to do what stamp duty has already done, which is to clog the market. Because as soon as you take a piece of tax out of a free market transaction, you then add in costs, then you both make it inflationary.
Make so much money, though.
And, well, you would
so
for
much
one
money.
turn.
Yeah.
So then you're turning to the 3 Ds: death, divorce and debt. Those are the 3 reasons that people would sell. Otherwise, they're holding on to their property for their whole
that's
life.
a good
And
point.
you were going to go and get capital gains tax and inheritance tax at the end anyway.
People would never sell a house, you're right.
They'd never sell.
Thank you, Richard. Later is the papers and everything else.